With the ink still drying on Lindian's updated mineral resource estimate released last week, analysts from a number of different firms have all pointed to the Kangankunde Rare Earths Project's size, volume and quality of grade to justify a speculative buy recommendation and a target price hovering between 46 to 69 cents. Some consistent themes have emerged from the research on Kangankunde, and these appear to underpin the bullish sentiments from analysts. Firstly, Kangankunde's high-grade indicated component of 25 million tonnes at 3.26% total rare earth oxide will comfortably support both stage 1 and 2 operations based on the model assumptions. This was a particular aspect of the mineral resource estimate which exceeded expectations, with an early estimates having the indicated resource at around the 20 million tonne mark. The company expects this to underpin the first few years of rare earth production in stage 1, a position set to be explored further when the feasibility study is released in the June quarter this year. And speaking of the upcoming feasibility study, another consideration is the modest capex involved to kickstart stage 1. With Petra Capital's David Brennan of the view, it could drive a material re-rating of the stock, while Euroz Hartley's Stephen Clark added that a spike in positive sentiment in the NdPr market will also contribute to a potential re-rating. A critical differentiator for Lindian is the fact that Kangankunde's material is the only non-radioactive source of rare earths concentrate on the market, which makes this project globally unique and highly sought after. The non-radioactive status has important positive ramifications as well. For one, it means that ore will be transported as a general good, which means it's not subject to radioactive controls and costs. It also has downstream implications for a manufacturing facility that will, in all probability, produce a non-radioactive waste product, which has a lower environmental footprint. Commercially speaking, this translates to a lower cost and a greater diversity of commercial saleability. Importantly, the company's already advanced in offtake discussions, with global commodity trading house Gerald Group signed on for 45,000 tonnes of monazite concentrate over a 5-year period in parallel with funding. And as Canaccord's research points out, the US government's push into Africa as part of its critical minerals strategy has opened the door for Lindian to begin early discussions with US government officials on potential funding support for stages 2 and 3. Some analysts have conceded that while NdPr prices remain steady at this point in time, companies with near-term catalyst potential like Lindian are at an advantage while the NdPr price catches up. And recent data is showing that the price remains on the steady incline. And there is a bevy of news flow in the pipeline, headlined by the feasibility study, a maiden ore reserve, additional offtake, funding, and final investment decision in the June quarter. The delivery of a significant resource upgrade at Kangankunde further established its status as one of the largest rare earths deposits outside of China, with the potential to play a significant role in the supply of rare earths globally. And as developments advance in Malawi, it's only a matter of time, it seems, before the global significance of the project is reflected in the share price.